What is welfare economies? It assesses how well the economy allocates its scarce resources in accordance with the goals of efficiencies and equalities. Economic welfare means real income, job satisfaction, employment perspectives, etc. etc. There are the two principal factors. One is equity and second is the efficiency. Equity means deals with how society's goods and rewards are and should be distributed among its different members and how the associated cost should be apportioned. Efficiency addresses the question of how well the economy's resources are used and allocated. The next is the difference between the consumer supplies and the supplier surplus. Consumer surplus means it is excessive of consumer willingness to pay over the market, and it relates to the demand side of the market. And supplier surplus, it is the excess of market price over the reservation price of the supplier. It relates to the supply side of the market. Reservation value, the minimum price that the supplier are willing to accept, are known as the reservation prices or the value. There is the total surplus, means it is the sum of the consumer surplus and the supplier surplus. And from the graph it is shown that the upper portion of the equilibrium part, the area upper of the equilibrium part, is the consumer surplus, and lower it is the producer surplus, and total of this is called as the total surplus. What is the efficient market outcomes? Efficient market outcomes means maximize the sum of producer and consumer surplus. The surplus number is not unique, it depends upon the economic environment. For example, Uber ride is that the price varies with the road and weather condition. Poor weather condition, demand increases. Poor road or weather condition, driver less willing to supply. So reservation payment increases. So that's why the demand graph shifted upwards and supply changes. Next is the what is the taxation surplus and efficiency. There is the minimum, the federal government always applies tax like GST or the provincial government sales tax. These taxes combined vary by provision. Different provinces has the different in their sales tax, but we suppose that the typical rate is 13%. Now what is a tax wage? Tax wage is the difference between the consumer and the producer prices. It is therefore imposed between the price the consumer must pay and the supplier price the supplier must receive. This shows that the tax wedge. There are the two burdens associated with the tax wedge. First is the revenue burden and second is the excess burden. The revenue burden is the amount of tax revenue raised by a tax, and the excess burden, it is the component of the consumer and the producer surplus forming a net loss of the whole economy. It represents the component of the economic surplus that is not transferred to the government in the form of tax revenue. And next is the sobering finding. Sobering finding tells us that if the government wish to implement a new program by raising the additional tax revenue, the benefits of the new program should be 25% greater than the amount expended on it. Next is distortion. Distortion means in resource allocation, means the production is not the efficient output. What are the market failures? That is the externalities. An externality, a benefit or cost falling on people other than those involved in the activities market. It can create the difference between the private cost or value and the social cost or value. There are two types of externalities. One is the positive externality and second is the negative externality. Negative externality includes the steel plant: low level less damage, high level output damage, high pollutant exhaust in air. And the positive included producers to get a type of free ride on the efforts of the other, like few shots demand. D, this reflects the private valuation, their personality willing to the pay. Social value of few shots greater. More individual vaccinated, probability others will be fluid false. What is the corrective tax? It seeks to direct the market towards a more efficient output when venturing into the field of environmental policy, where corrective tax is usually called as the carbon tax. What is the environmental policies in the climate change? What is the greenhouse gases? Greenhouse gases basically gases that accumulate excessively in the atmosphere earth and prevent heat from escaping and lead to the global warming. Global warming causes lots of problem like uh, melting of the glaciers, increasing the level of the oceans, so on. What are the activities that cause the global warming? One is coal based power generation, oil burning motors, wood burning stoves, ruminant animals, etc. Most common greenhouse gases are carbon dioxide and methane. Next is the greenhouse gases as a common property. Every citizen in the world owns them, every citizen has equal access to them, and it matters little where the GHGs originate. Consequently, if economy A reduces its greenhouse gases emission, economy B may simply increase its emissions rather than incur the cost of reducing them. Hence, economy A's behavior goes unrewarded. What is the Kyoto Protocol in Canada? Actually, Canada was active in the negotiation that led to the Kyoto Protocol in 1997. The Liberal government that signed the accord in 1997 ratified it in the Parliament in 2002. Canada's Kyoto target was 6% total reduction in the greenhouse gases emission by 2012 compared to 1990 levels of 461 megatons. Government of Canada GC 1994. Despite signing the accord, greenhouse gases emission increases approximately 24.1% between 1992 2008. In so that in 2012, Conservative Prime Minister Stephen Harper withdrew Canada from the Kyoto Protocol. Economic policies for climate change. Basically, there are the three ways. One is direct, and two are the incentive based. Now, the what is the marginal damage curve? Marginal damage curve is red one. It shows the reflect the cost of to society of an additional unit of pollution. It has positive slope, and marginal abatement curve reflects the cost to society of reducing the quantity of pollution by 1 unit. It has negative slope. An optimal quantity of pollution occurs when the marginal cost of abatement is equal to the marginal damage. Incentive mechanism or tradable permits. A system of tradable permits is frequency called cap and system. Tradable permits or corrective carbon taxes are based systems aimed at reducing the greenhouse gases. Now, what is the policy in practice international? Permits would be internationally, and such a system might be benefit to developing economy. It is mutually beneficially for developing and developed countries. For example, B is located in the developing world and A is the in the developed world. Both would obviously gain from such an agreement, and because greenhouse gases are a common property, the source of a GHGs from a damage standpoint is immaterial. Incentive mechanism in taxes. Corrective taxes are frequently called Pigovian taxes after the economist named Arthur Pigou. For example, taxpayers are frequently reluctant to see governments take yet more of their money in the form of new taxes. Such concerns can be addressed by reducing the taxes in another sector of the economy in such a way that the package of the tax changes maintains the revenue neutral impact. Thanks.